Okay, Assalamu alaikum. Can everybody hear me? Yeah? I don't. Okay, good. My name is Shoaib Sharif, and I'm with Ijaracdc. And thank you very much for coming here on a beautiful Saturday afternoon. I know you rather would be outside in the sunshine than in this warm building. But inshallah, today you'll get a lot of good information on how to purchase a home or even a business without riba. So what I would like to do today is to give you a quick overview. First, we'll talk about who IJARA is. The most important question that you probably have is the Sharia authenticity. How do we know that our program is, in fact, halal? And then we'll talk about what is Riba, right? What is the thing that we're trying to avoid? And then we'll touch upon why it's important for Muslims to avoid Riba. And then we'll talk about Islamic finance in general. How do you do Islamic finance? And then a quick overview of the home buying process. And then we'll talk about what to expect during our application process. And then finally, we'll touch upon our home purchase program, okay? If you would permit me to go through the presentation first, I think most questions will be answered, and then we can have a question answer session at the end. Is that fair for everybody? Yeah? If there's something really that you don't understand, then please let me know, and inshallah we'll stop. But I think if you let me get through the whole presentation, most questions should be answered, inshallah. Okay? So, who is Ijaracdc? IJARA Community Development Corporation is a nonprofit. We're a 501c3. And we're not the first company to do Islamic finance in the US, right? And we're not a lender. We're not a bank. What we do is we work with banks, with credit unions, and other even private investors. People that want to do Islamic financing, they just don't know how to do it. And then we work with customers like yourselves that want to access Islamic financing, and we'll put the two of you together utilizing our documentation and our process, okay? While we're not the first company to do Islamic finance in the US, we are the first company to be able to offer our products and services in all 50 states. Our closest competitor is in 32 states. We're also the first company to be able to offer commercial and nonprofit financing. Nonprofits mean community centers, masjids, schools, organizations like that in all 50 states. We're also the first organization, actually the only organization so far, to have completed an SBA-backed Sharia-compliant transaction. The SBA, as you may or may not know, is the Small Business Administration, which is where the government, the federal government, will actually come in and help small businesses acquire property or expand their business with some government guarantees. So we're the only company that's been able to complete many in a Sharia-compliant way. And we're probably the largest nonprofit that's operating in this Islamic finance space. And our services are now available, or have been available in Canada since November of 2008. So just to give you an idea of the size of our organization, not only are we covering all 50 states, our closest competitor is 32 states. Not only are we covering all provinces in Canada, our closest competitor is only in one province in Canada. So you are working with an organization that's well established. So let's talk about Sharia authenticity. There were many scholars that were involved in the creation of the IJARA process, okay? It's not something that we just woke up Tuesday morning and decided this is how we're going to do Islamic finance, right? So these scholars, and it was a group of scholars, as you know, one person individually can't issue a fatwa by themselves, right? Usually a fatwa or fatawa is a certificate of approval that's issued by a group of known scholars. So the original product was approved in 1995 by an organization called Dala al-Baraka Group. Dala al-Baraka was an organization that if you wanted to do any kind of an Islamic product, whether it was a savings account, a checking account, a mutual fund, or even a finance product, anywhere in the world, you would go to Del Al Baraka Group, which is based in Saudi Arabia, to get a certificate of approval, to get a fatwa from them certifying that your product was in fact Sharia compliant. Then in 1997, the product was licensed to UBK, United Bank of Kuwait, and UBK labeled it the Al Manzil program, and they did about $50 million in transactions here in the US. Then if you remember the first Gulf War, all the Kuwaiti assets got frozen, and UBK, United Bank of Kuwait, of course didn't like that too much, so they closed up their US operation. And the program then lay dormant for a few years, and then we got it introduced to University Bank in Ann Arbor, Michigan, and the fatwa was updated again in 2003. University Bank had very good success with it, and as you know, they started MyUIF, which is now one of our competitors, but they still offer our product, the IJARA product. Then in 2007, Islamic American University wanted to acquire their campus, okay? And they spent almost 9 months. They studied guidance and Reba and MyUIF and IJARA and all the other organizations out there. And they decided that IJARA was the best method for their campus acquisition. And these two scholars you may recognize are active with AMJA, the American Muslim Jurists Association, or Association of Muslim American Jurists. And they approved the IJARA product for acquisition of Islamic American University. Then in 2009, when we started in Canada, there's Sheikh Umar Ismail, who's a well-known scholar in the GTA, Greater Toronto area, and he's well-known for his expertise in Islamic finance. He's also a former student of Justice Taqi Mufti Osmani, and he approved, he updated the fatwa for our entry into Canada at the time. And then in 2012, we had it updated again. And 2013, it was updated again. And then most recently, last year, we had the fatwa updated again. So some people may say, oh, IJARA, you're working with a fatwa that's, 21 years old. Yes, our product is over 21 years old. It's very, very well established. But as you can see, it's been updated through the years. Why? Because we know the Sharia doesn't change, but we know laws change, right? And as laws change, we want to make sure that our product stays up to date, because remember, we don't exist in a bubble, right? We can't just do Islamic anything that we want to. We have to still comply with federal and state laws, right? Does that make sense? So we're constantly updating and constantly making sure that we're staying in compliance. So let's talk about Riba. What is Riba, right? Most people, when they think of Riba, they think of interest. Is that right? Well, the word Riba actually means an excess or an addition. But there's really two types of Riba, okay? The first type of Riba is Riba Nasiya, which is basically interest, right? And the second is Riba al-Fadl. Riba al-Fadl is a little bit more complicated, okay? We won't spend too much time talking about it other than to say that our transaction avoids both types of Riba, okay? People ask me, oh, Brother Schwab, is there any interest in your transaction? And I generally answer them by saying, there's no Riba in our transaction, because our transaction is going to avoid both types of Riba. The type of Riba that's considered interest, and also the type of Riba that's Riba al-Fadl, okay? Now an example of Riba al-Fadl might be, let's say you gave me an ounce of gold today, right? And maybe I repaid you the same ounce of gold next year. There could be Riba al-Fadl there because the values are not the same, right? Or you gave me an ounce of gold today, and next year I paid you back with a lot more silver, right? There could be Riba al-Fadl there. So you have to have some method to keep the values the same of what you're trading back and forth. Does that make sense? Okay? And this speaks to a common misconception that people have, right? Some people will say, well, if there's no interest, give me $360,000 for this house. Over the next 30 years, 360 months, I'm going to give you $1,000 a month, right? Isn't that what some people think no interest means, right? Well, the fact of it is that the $1,000 a month that you're getting 20 years from now does not have the same value as maybe the $360,000 you got today, right? So there could be riba al-fadl in that. So there has to be some way of making sure that the values stay the same, okay? Why is it important for Muslims to avoid riba, right? What's the big deal? Well, probably the most important reason is that, Allah clearly says in the Quran that if you participate in riba, you declare war with Him and His Messenger, right? So who wants to be at war with Allah? Well, I don't think anybody does, right? So how much more trouble would we be in if we are guiding you into riba, right? If you're at war with Allah and His Messenger for being involved in riba, how much more trouble would we be in to guide you into it? So we don't even want to be involved in this business unless, we're sure that our transaction is Sharia compliant. We believe in our scholars. We believe in, the expertise that they have put together to develop this program and make it Sharia compliant, okay? The other thing I want to point out is Surah Al-Baqarah, Ayah 275, okay? Some people will say that, oh, what you're doing is exactly like what the bank is doing, right? Because the cost is the same, right? But Allah has clearly stated that while He's permitted trade, He has forbidden riba, right? What does that mean? Basically, it means that the cost of a transaction is not important. The economics don't matter, right? An Islamic transaction can cost more, it can cost less, or it can be the same, right? What's important is how profit is earned, okay? And as long as the profit is earned in a way that's Sharia compliant, then it can be any agreement or arrangement that the two parties agree to. Does that make sense? Yes? Okay. So let's move on from here. Let's talk about Islamic finance in general. There's 7 different ways to do Islamic finance. 3 that are commonly practiced in North America. The first is Murabaha. Murabaha is an installment sale, right? This is where you buy something at one price, you mark up the price, and then divide the marked up price over time, right? We're all pretty much familiar with Murabaha, right? You buy something for one price and then you mark it up, right? Does that make sense? The second is Mushara. Mushara is a declining balance co-partnership. The word sharika means to share, right? So you form a partnership, you own the property or the asset together, and then you share in the gain or the loss, right? And then you have Ijara. The word Ijara itself means rent. Ijara wa ikhtana. Rent with acquisition, or rent to own. Okay? So let's go into more detail on Murabaha. So let's say you buy a home for $100,000, okay? And let's say you mark it up to $180,000, and I'm just using this number because the math is easy. Let's say you divide that $180,000 over 30 years, your payment is $500 a month. Does that make sense? Everybody understand how this works? This is Murabaha. So what's the problem with Murabaha? Well, you cannot have a discount for early payment, right? If you have a discount that's written into the contract, then it's not a true Murabaha, okay? No matter when you pay the transaction, you have to pay the full contract price. So for example, let's say, after 4 or 5 years, you got a job relocation, you had more kids, you need a bigger home, you have family members that come live with you, so you need a bigger place, your kids graduate, go to college, you need to buy something smaller, right? Every 7 to 10 years, our population is not that different statistically than the traditional American population, in that every 7 to 10 years, something happens, right? We need to refinance, we need to sell, we need to move, we need to do something. And let's say you can sell that house for $140,000. Great, your property went up in value, right? But your contract is $180,000, right? So what does that mean? That means that you're writing a check for $40,000 to get out of your contract, right? That's how Murabaha works. It doesn't matter when you pay it, you have to pay the full contract price. Okay? Now the people that do Murabaha will tell you that, okay, don't worry about it. When it comes time to sell, we'll give you a discount. Okay? The question is, are they required to give you the full discount that you might get if you're paying a very large fee to get out of their contract? In one case, a customer had to do this. They had to pay $40,000 if they wanted to refinance out of Murabaha. So the problem with Murabaha is once they got you, you're stuck with them, right? No matter what. Even if somebody else can offer you something cheaper, it doesn't matter. Who's going to let you go when they know that they can charge you $40,000 for you to leave? You're not going to pay it. You're stuck, right? So this is one of the reasons why we do not believe that Murabaha is ideal for long-term real estate, because the cost is too much. The second problem with Murabaha is that there are 2 transfer taxes at closing, right? It doesn't matter where you live. In 99% of the areas, there's going to be some kind of a tax when property changes hands, right? When the seller sells it to the financier, there's a tax. When the financier sells it to you, the customer, there's a second tax. It's called a land transfer tax or capital gains tax or something, right? No matter what they call the tax, there's going to be some kind of a tax when you sell property. Everybody familiar with this? So we think that this is ideally suited for something short-term, like auto finance or inventory finance. Okay? Anybody have any questions about Murabaha right now? No? Okay. So let's move to Mushara. Mushara is a declining balance co-partnership. Okay? And it's better than Murabaha because you only pay the balance when you have to sell it, right? Or when you're paying it off, right? That's better than paying the full contract balance, right? You just pay whatever the existing balance is. You do form a partnership, and typically in most areas, again, not everywhere, but in most areas in the US, actually in Canada also, if you own a property and you live in it for your home, it's called homestead, right? And the homestead tax rate is one rate. And if you own the same house for an investment, then that's usually an investment property tax rate. Now in Michigan, where I'm from, the investment property tax rate can be 30% more than the homestead rate. So for example, if your property taxes should be $3,000 a year, maybe they'll be $3,900 a year, okay? So automatically, when the taxing authority, the county or the state, when they see the LLC on title, the limited liability company on title, they're going to charge the higher property tax rate. We know this because we do Mushara also, okay? And if you go to them and argue, in a lot of areas, if you go to them and argue, well, I'm living in this house, it's in an LLC, but I want to pay the homestead tax, they may not give you that. You know why? Because that sets a precedence, right? You all know what a precedence is? Lots of people own investment properties in an LLC, a limited liability company, right? And if I owned an investment property in an LLC and I see you having an LLC getting a lower property tax rate as a homestead tax, that's a precedence. I now have a legal argument that I can make with the county to say, hey, he owns it in an LLC, I want the lower property tax rate also. So a lot of times they will not give you the lower property tax rate when they see the LLC on title, right? Does that make sense? So automatically with Mushara, your property tax rate might be higher. And legitimately, for Mushara to be a legitimate transaction, okay, and I don't mean the organizations that do Mushara that take shortcuts, you're supposed to share in profit and loss, right? You're supposed to share according to your percentage in whatever the gain or the loss is, okay? There are some organizations that do Mushara, they say, oh, we'll just waive our gain, but we'll share in the loss. Does that make any rational sense to anybody? What investor is going to waive their gain but share in the loss, okay? It's a shortcut around how Mushara works, Okay? Legitimate musharaka should be a sharing. Okay? And there's a transfer tax at closing, right? When you have an LLC on title and you transfer it to an individual, it's treated as a sale, right? And we all know that there's a land transfer tax or a capital gains tax, or there's some kind of a tax that's going to have to be paid. The government always wants their piece, right? We all know that, right? So, and you need permission from your partner for any changes, right? You even need permission from your partner to sell the property, okay? If you're going to be in a musharaka transaction and you want to sell your house, you have to wait till somebody in Virginia is going to sign a piece of paper for you to sign off, right? Does that make sense? You have a partner, you need their signature. We've had many instances where we've gone to refinance musharaka transactions where they say that they lost the LLC paperwork. And then they try and contact the customer to try and convince them to refinance with them, even though our rate is lower and even though we don't have any closing costs. And then when the customer says, no, we want to go with IJARA, miraculously the LLC paperwork shows up, right? But not until they've caused a delay for that closing. So you are at the mercy of your partner for signing off on a signature to sell your property or to rent your property or to do anything you want, right? So, but we think that the best application for musharaka is a business goodwill. Does everybody know what business goodwill is? Business goodwill is the value of a business above and beyond its assets, right? Is the value of the name of the business. Does that make sense? Or for a student loan program. We have a student loan program. We don't have funding for it, but that's modeled after the musharaka program, okay? And that brings us to IJARA. Like musharaka, you only pay the balance when you go to pay it off or sell it. You're taxed at the homestead property tax rate, which is the lower tax rate. Isn't that good? There's legitimately no sharing of profit and loss, right? There's no shortcut there. This is, from a Sharia perspective and a legal perspective, you're absolutely 100% entitled to 100% of the profit and loss. The transfer tax is only $1. Who only wants to pay $1 in transfer tax? Only 4 of us? Transfer taxes can be anywhere from 1 to 2.5%, right? If you have a $180,000 home, 2% is what, $3,600, right? Would you rather pay $1 or $3,600? $1, yeah, more people now, $1, right? So you only pay $1 in transfer tax. You don't need any permission to sell, to sublease, to put on a deck, do anything you want to with the property. You need nobody's permission but yourself. Isn't that better, right? Even to sell the property, you don't even need our signature. You can do that entirely yourself. You don't have to have papers go to Virginia. You don't have to have us pretend that we lost your documents, right? You can legitimately do everything yourself. And our transaction may have some estate planning benefits for you. Does everybody know what estate planning is? No. It's what you plan for in the event that you die, right? What happens after you die, right? How many people have a will? Nobody has a will? Okay. This is, the common thing is I do this in all over North America, Canada and US, and about 1 out of 40 people, on average, has a will, right? Now, we're a community that thinks about the akhirah at least 5 times a day. Am I right? Shouldn't we plan for what happens with our families in case we were to die in this country? Shouldn't we plan for that? Well, if we don't have a will, the trust that we utilize may give you some estate planning benefits. Okay? So remember, we're a nonprofit. We use the method for what is ideally suited for, right? The best method for the best application that's best for the customer, not necessarily what's best for the investor. You can see how Murabaha and Musharaka are actually better for the investor in the long term, right? Does that make sense? But what we do is we do all three methods, but we only use the method for the right application. So let me give you an example of how we would use all three methods, right? So as an example of a gas station, we would do the building, the canopy, the pumps, the signage, the asphalt, right? The coolers, the counters, the gondolas, the computer, everything physical, we would do as an Ijara. Then we would do all the inventory, even the fuel in the ground, as a Murabaha. And then the business goodwill, right? The value of the business, right? The value of the name has been in the same location for 10 years. You know, so it has a good reputation, right? The extra amount that you pay for the business, we do that as a Mushara, a partnership. So we may actually have all three methodologies in one transaction, right? Does that make sense? But you use the right method for the right purpose. Does that make sense? Don't use the method that makes you the most profit. Use the method that's right for the customer and that's right for the application. Does that make sense? So for example, for construction finance, we do construction finance also. We would do the construction part, right, as a Murabaha, right, it's short term, right? And then once the building is finished, then we would do IJARA for the rest of it. Does that make sense? Yeah? Any questions so far about the three different methods? Okay, so let's talk about why we use a trust, right? Why is a trust used in our transaction? Well, remember, going back to history, our process was originally created in 1995, okay? But it took the scholars about 2 years to develop everything and improve everything. So they really started in 1993. And what they did was they studied taxation, they studied inheritance, they studied property laws, land transfer taxes, everything else. And then they studied the different types of entities, corporations, partnerships, LLCs, trusts, okay? And they basically drew two circles, one being Islamic law and one being Western law. And they want to see which entity has the highest degree of interpretation, right? The highest degree of overlap. Now this is a little bit of an exaggeration, right? But you get the point from looking at the picture that the trust, and remember there's 7 different types of trust, and there's also 7 different types of waqf, right? We all know what a waqf is? A waqf is basically like a trust in Islamic law, right? Yeah, basically a lot of people use it for sadaqah. So if you were to study the meaning and the functionality of a trust in US law and the same thing in Islamic law for a waqf, you would see that the highest degree of interpretation is between a trust. Something less for a corporation and something more or less for a partnership. Does that make sense? So this is one of the reasons why they decided to utilize a trust for the transaction, okay? The other benefit of utilizing a trust is that there's no ownership in a trust, right? In a corporation, the stockholders are the owners, right? In a partnership, the partners are the owners. In an LLC, the members are the owners, right? In a trust, there is no ownership, okay? Some people think that in order for a transaction to be Sharia compliant, the financier has to own the property. That is not true. In order for a transaction to be Sharia compliant, it has to be a third party owner that's selling it to you. It doesn't have to be the lender, it has to be a third party. So the trust is a true third party that owns the property for your benefit, but if something happens to the lender, it doesn't affect you, right? We already know, for example, one of our competitors has already been sold once, right? They started off and then they basically got sold, right? And there's all new people there. So how do you know what's going to happen to your transaction, 20 years from now? Don't you want some protection, some insulation, especially if you have to count on someone signing for you, right? Well, the trust gives you that benefit. This was the wisdom that the scholars had was when we create this entity, it gives customers control over the property, control over your own destiny, right? And at the same time maintains the Sharia compliance and may give you some estate planning benefits. Okay? So let's take a look at some of the benefits of utilizing a trust. Number one, it's the best fit for Sharia compliance, right? In banking laws, banks and other institutions are not necessarily permitted to own real estate, right? But they can interact with a trust very, very easily, right? Because a lot of people of wealth, doctors, business people, Donald Trump, Mitt Romney, all these people, they have their personal assets in a trust, right? So they're used to dealing with a trust. And when you have a lot of banks or a lot of people that can participate in a transaction, what does that do? You have more competition. More competition means what? The price goes down, right? Does that make sense? So ultimately you win by having lower pricing. And because we're a nonprofit, we do not mark up the rate, right? All of our competitors have to sell their transactions to somebody, right? So they mark up the rate so they can make a profit when they sell that transaction. We do not mark up the rate at all because we're a nonprofit, we don't need to. That's not part of our format, okay? Secondly, you might get some estate planning benefits, right? We all know, or we should know, that when you die, there's some kind of a tax, right? Your assets will get taxed. I call it the death tax, but it's probably the estate tax, right? Or inheritance tax, or there could be a capital gains tax if you're in some places in Canada. But listen, the government is going to collect their tax one way or the other, right? Guess what? The trust does not die. And because the trust does not die, it may defer your tax, okay? This is why people of wealth utilize a trust so they can maybe pass assets to their children later on without having to pay so much tax. Does that make sense? Right? Everybody's heard of Paris Hilton, right? We've all heard of her dad created a trust, right? Put all these assets in the trust. She gets all the benefit, right? If he dies, what happens? The trust didn't die. She still gets all the benefit from the trust, right? And if she sells an asset in the trust, she can replace that and still doesn't have to keep deferring the tax. This is why people of wealth utilize a trust, okay? Let me give you the other benefit of having a trust. We've been doing this since 2005. We've had a number of customers that have died, okay? We had one customer that he did not have a will, which is common for a lot of us, right? He died in Massachusetts, very sad event. But within 2 months, his wife was able to take control of the property, sell it, take the money, and relocate the family, okay? And we happen to know, because her brother is also one of our customers, that 4 or 5 months later, she was still in court, probate court, trying to get control of one of the retirement accounts and some other investment account. I'm not really sure what the problem was, but again, you have to deal with the court system if there's no will, right? If you have assets and you don't have a will, it's up to the courts here to decide what's going to happen. But because of the trust, she was immediately able to sell the property. She had full control right away, okay? This will be one of the benefits that you get. The second thing is that you can change the beneficiary anytime you want, right? We'll talk about that in a minute. But initially, you're the beneficiary of the trust. You can add your children, right? If you have more children, you can add more children, right? If you get upset as a child, you can remove the child. But if you want, or if you have grandchildren, you can add your grandchildren, right? Do you see how the trust can give you the same planning benefits as if you had a will? Maybe not exactly the same, but at least it's something more than you have right now. And then rather than going and seeing a lawyer and spending $1,500 to $10,000 to get a trust made, you're getting one as part of this transaction, right? So for wanting an Islamic transaction, you're getting all these other benefits because of the trust. Something you don't get with an LLC or with a, another type of transaction, right? Secondly, the type of trust we use actually qualifies to be only a dollar transfer tax, right? You can transfer as many times in and out of the trust as you want to, and there's only a dollar transfer tax, okay? Let's see. Any questions so far? Nope. Okay. So let's talk about who owns a trust. Yes. We're a 501c3. We're a 501c3.
And social services.
Yes, except we're more for Islamic social services or Islamic homeowner service. We're a legitimate, registered 501c3. If you want to make a donation, it's tax deductible, okay? So we are a nonprofit, a formal nonprofit, okay? Fully registered with the IRS, okay? We're here to serve our community. Yes, we want investors to benefit, but we don't want investors to benefit more than they need to, right? With Mushara and Murabaha, you can see how the investors can benefit more than what the consumers can, right? So we want everybody to do the transaction that's best for the customer, right? We wish these people that are doing Murabaha and Mushara would change their mental attitude and say, no, IJARA is better for the customer, we want to do IJARA too, right? We're happy for them to do it. Some of them can do IJARA, but they encourage you to do Murabaha or Mushara, right? Because IJARA is better for the customer. This is why we advocate for it, right? This is why we try and educate people. Understand what you're getting into, and then make the decision that's right for you, okay? But we do all three methods.
Who's your main investors?
We'll get into that, okay? But next thing I want to do is go into, who owns a trust, right? This is probably the second biggest question we have after Sharia compliance is, well, who owns the trust? Is it me and IJARA? Are we in a partnership, right? Well, remember, there is no ownership in a trust, right? Think of a trust as a legal person, okay? It has an existence of its own, right? It acts on its own. It's an entity that's created in law. Does that make sense? So you have, somebody gave me a really good example recently. It's like one of your kids, right? You created this kid, right? A kid exists on its own, right? It represents you, right? You give it direction what to do, right? And we have a baby here too, so that's a good example right there. Don't worry, I'm not like Donald Trump. I'm not going to kick him out. So that's another way to think of a trust, right? A trust is like a legal person, okay? And this legal person, while it doesn't have any owners, it does have some parties, right? And these parties, the first party in the trust is what we call the grantor, right? To grant or to give, right? Grantor. So when you give something to the trust, that makes you the grantor. Does that make sense? So, for example, if you're trying to refinance a property and you give your title to the trust, right? That makes you the grantor because you granted the title, right? When you have a purchase agreement, what do you have? You have the right to buy, right? You don't have the actual property, but you have the right to buy the property, correct? Yes? So when you give your right to buy to the trust, that makes you the grantor. Make sense? Okay. The next party in the trust is the beneficiary, right? The beneficiary is the person or persons that get all the benefits from the trust, right? And in fact, the beneficiary can be another trust. It can be an LLC. It can be whoever or whatever you want it to be, okay? Now, when we set up the trust, we set it up with you being the beneficiary, but you can add a successor beneficiary anytime that you want because you're the grantor of the trust, right? The only person in the trust that can decide on who the beneficiary is the grantor, right? Everybody understand that? The only person that can decide on making a change to the beneficiary is the grantor. Okay? Then we have the trustee. When we create the trust with you being a trustee, and then IJARA gets added as a trustee, as a co-trustee. Okay? Why do we do this? The reason we do this is for two reasons. Allahu Alam, IJARA is here today, could be gone tomorrow, right? Just like UBK was here, and then they went away, right? Just like one of the competitors already got bought and sold, right? Who knows what's going to happen in the future? So what we do is when we create the trust, We create the trust with you being the initial trustee, and then Ijara gets added as a co-trustee. And then Ijara functions as the trustee until the transaction is over. If something happens to Ijara, it doesn't matter because guess what? You're already a trustee and you can take over the transaction anytime you want. It's like having a plane with two pilots, right? One pilot, falls out, the other one takes over. So if something happens to Ijara, you can immediately take over the transaction, right? What's the second thing this means? The second thing this means is that you don't need our signature to sell the property, right? You don't have to send your documents, the title company doesn't have to send your documents to Virginia to be signed off on and then come back to you. You can actually sign your sales documents yourself, okay? Because you're already a trustee of the trust, right? Now the trustee of the trust has the right to sell the property, but they can only sell the property if the grantor gives them permission, right? So who's in control of the trust? Come on, shout it out. You know the answer? Grantor, yeah. So the grantor is the person that's in control of the trust. Does that make sense? And if the grantor is you, who controls what happens to that property? You do, okay? And then finally, you have the investor, okay? Any questions about the trust before I move on? It's really important you understand the trust. Everybody knows? Okay. So let's talk about mortgage and Sharia compliance, right? What is the Sharia compliance issue with a mortgage? Interest? That's 100% of the answer that I always get. Okay? And the fact of the matter is that mortgage, when people refer to mortgage, they actually mean two things, right? The word actually means mortgage and note, right? So just loose, it's like saying Kleenex instead of tissue, or Xerox instead of photocopy, right? People use the word mortgage loosely to mean the mortgage and the note, because most of the time they go together, most of the time, right? But the fact of it is, the mortgage is a rahan, right? Rahan is a security instrument, right? We all know the story of the Prophet sallallahu alaihi wasallam. He gave a shield to his neighbor and he borrowed some money, right? We all know that story, right? So the act of giving the shield is rahan, security, and it's permissible. We know through the sunnah of the Prophet ﷺ that a mortgage is permissible. Giving security is permissible. You can sign a mortgage all day long, okay? You can Google it. You can go online and you can look at the mortgage language and read it, okay? There's nothing that is not Sharia compliant about the actual mortgage itself, okay? People say, oh, IJARA, they make you sign a mortgage. Yeah, so what? There's nothing wrong with a mortgage because it's a security, okay, a rahan. The problem from an Islamic perspective is the note. The note is the evidence of interest, right? Does that make sense? When people use the word mortgage loosely, right, they're referring to two things, mortgage and note. The mortgage itself, hey, no problem, sign it. The issue from an Islamic perspective is the note, right? So what's the IJARA difference, right? How do we handle how the profit is earned in the transaction, right? Is this the next question people have, right? Well, if a bank's involved, how can they not, how are they going to earn the profit? They only earn, how many people believe banks only make money with interest? The only way banks make money is through interest? There's a lot of other ways, right? There's fees, right? They charge a lot of fees. Remember a couple years ago, Chase Bank lost $2 billion in trading activities, right? Remember the news? It was all over the news. What's trading activities? That has nothing to do with interest, right? Well, let me give you, you have to think of the IJARA transaction more as a commercial transaction, right? Let's say I came to you, let's say you're the bank, and I come to you and I say, give me $8 million, I want to build a Walgreens, right? What's the first question you're going to ask? Your first question is, well, Are you crazy? No. The first question is going to be, show me what you have, right? And me as a trust, I'm going to say, I don't have anything. All I have is this piece of property, right? Then you're going to say, okay, well, show me your income, right? I don't have any income, but I have this lease, right? So then say, okay, let me lend, right? Walgreens, good stock price, they have good credit, they've got good assets, they're a good guarantee. Okay, fine, we'll give you $8 million, go build that Walgreens. But because you don't have anything, and because all of your income and all of your cash flow is tied into that lease, we want an assignment of rents and leases. Okay, Google it. It's a legal document that's used in commercial transactions that physically assigns income from a lease to an entity, right? In our case, it physically assigns the income from the lease that's paid to the trust to the bank. So in our transaction, and let's follow the money. It physically comes in as a rent payment to the trust, and then it's physically assigned to the bank, right? So in a normal mortgage, what the bank does is they use the mortgage itself, security, to take the property, right? There's a default, right? And they use the note to go after the money, right? Make sense? In our transaction, they can utilize the mortgage to take the property, right? Because it's security. And they can use the assignment of rents and leases to go after the money. Because remember, all of the profit in our transaction is built into the lease. Does that make sense? So you will sign a mortgage, it's true. Everybody says IJARA makes you sign a mortgage. Yeah, it's true. There's nothing wrong with a mortgage. It's a security instrument, okay? Let's talk about consumer protection issues, right? Well, first of all finance companies have to comply. No matter how the profit is earned, you have to describe it as a percentage, right? Does that make sense? No matter how you earn your profit, you have to describe it as a percentage. And more specifically, under consumer protection laws, you have to use specific forms. And these forms do reference interest. Okay? Now, people will say, oh, Brother Schwab, IJARA, we're all Muslims here. Do we really need to do this? No. The fact is we don't, right? But if we don't, and the investors don't, and you go get a lawyer 5 years from now, 10 years, 15 years from now, you say, oh, hey, Schwab, IJARA, according to my consumer protection rights, you were supposed to disclose the profit to me using this form. It was supposed to say interest on it. It did not. So guess what? I want my money back. I'm going to keep the property, and you're going to pay me on top. Triple damages, right? Everybody understand that concept? Triple damages. So no matter how the profit is earned, it's going to be described as a percentage. And because the liability falls with us, the scholars say that, yes, you are permitted to make sure the consumers sign these disclosures. So you will sign these government standard forms that we are required to tell you how the profit is earned. Okay? Now, one of the scholars gave a very good example. He said, if you go to the city and you look up the masjid, it's listed as a church. It was built under a church zoning, right? Now, a lot of communities are now changing their definition of church to a religious organization, right? But back then, church zoning is what you needed to build a synagogue or a church or a masjid, right? But if you look at the building, it's clearly a masjid. It's used as a masjid, right? But according to the city, it's a church. So it's the same thing here. We don't care how they classify it on these disclosures. We know what it is. Make sense? So you will have to sign these documents. Next question people ask is, well, if it's Islamic, how can there be a percentage? Right? Well, let's take an example. Let's say you buy something for $100,000. You buy the home and it's free and clear, right? And then you rent it to me for $500 a month. At the end of the year, you're going to collect $6,000 in rent, right? That $6,000 is a 6% return on your $100,000 investment, correct? Is that 6% rent or is it interest? Well, it's clearly rent, and it's permissible, right? Now, in a normal mortgage example, you give me the $100,000 in cash, right? I go out and buy that same house with that money, and I pay you the same $500 a month, the same 6%, but now I'm paying you for what? Use of money, right? Paying for use of money is Riba. Paying for use of property is trade. Make sense? Now this brings up another point. I mean, I may come to you and say, oh, brother, sister, don't worry about it. The profit is only $6,000 a year, right? And you may say, oh, that doesn't sound too bad, right? But if I have to tell you the profit is 6%, when the rest of the market is 3.25%, right? You might think, well, wait a second, why is it so high, right? This is why the government wants us to use these disclosures so that you have a better understanding of what the cost of a transaction is. Does that make sense? So no matter how the profit is earned, you have to describe it as a percentage, right? Because here, I can fool you with numbers and say, oh, $6,000, don't worry about it. Or I tell you 6%, you can say, wait a second, these guys are 3.25%. Why are you charging me so much? Right? Make sense? So let's look at the home buying process very, very quickly. What we suggest is you come to us first. We do a pre-approval for you, and then you go shopping for a home, right? You pick the home. You have to like the home. You negotiate the price and the terms. You sign the purchase agreement. And then once you sign the purchase agreement, you send it to us, and then we work on getting it closed for you. The only thing we care about is that the property is in move-in condition and the value. You have to be satisfied with everything else, okay? And if the property needs work, we have a renovation program, okay? So you can buy a property that needs a new roof or needs a new kitchen or needs a new basement or something, and get the money to fix it up, okay? All with as little as 5% down payment, okay? And in some cases, as low as 3.5% down payment, okay? So this is possible. Renovation financing is available. So let's talk about what we need to apply. Well, very simply, number one, we need to know that you make enough income and your income is stable. So we need to see your last 2-year W-2s if you're self-employed 1099s. We need the last 2-year tax returns, last 2-month pay stubs, and last 2-month bank and investment statements, okay? Now these bank and investment statements, what we're looking for is the funds for closing, your down payment and your closing costs have to be in your account for beginning and ending balance 2 months, okay? And if not, then you have to show where that money came from, right? And that's under the Patriot Act. Frankly, I don't care if you show up to closing with a suitcase full of $100 bills, right? But the government does. Under the Patriot Act, right, they want us to verify where all your large deposits came from. Okay, what makes up a large deposit? Well, 1/3 of your monthly income, anything over that is considered a large deposit, right? So, if, for example, easy math, if you make $3,000 a month and you make a deposit more than $1,000, guess what? You have to source it. Well, what's if it's $1,001? It's more than 1/3, you've got to source it, even if it's a penny over. Okay, the computers, the systems that do all these, and these are Fannie Freddie systems that we all have to comply with, will kick it out and say you have to document this, okay? So it's not a requirement from us. We don't care, okay? This is something that you need to be able to show where it came from. And if you have it in your account, beginning and ending balance for 2 months, then we don't need to see where it came from, right? That's called seasoning. So there's sourcing or seasoning. Gift funds are permissible. You can get a gift. okay? If you're buying a home for your for your personal residence. If you're buying an investment property, no gift funds are permitted, okay? And there may be other conditions that come up that the underwriters may ask for, right? So what to expect? Normal, everyday application process. We're about 35, maximum 45 days right now in our process, okay? And that's because of the new, what they call the TRID rules, which were passed October 3rd of last year. These have created a lot more documentation and process for us. So we're running on average about 35 days from application to closing. Okay, let's talk about our program here. Residential. 1 to 4 units is still considered residential. If you live in one of the units, you can do as little as 3.5% down. Okay? For first-time home buyers, we can do up to 97% financing. If you're buying in a rural area, or if you happen to have military service and you qualify for VA benefits, which, believe it or not, in our community, there are a lot of active or past active members that were in the military, and they qualify for 100% financing, okay? We can do jumbo finance up to $3 million. In fact, we can do up to $1 million with 10% down, okay? Renovation, construction financing. We can do renovation and construction. If you have an investment property you want to buy and fix up, okay, we can do that financing for you as well. If you just want to buy a house and fix it up so you can move into it, we can do that as well with as little as 3.5% down, okay? And of course, the trust owns the property at closing. If you have an existing mortgage and you want to get out of it and into something Sharia compliant, sometimes it makes sense to refinance, sometimes it doesn't. Again, we're a nonprofit. We don't just want to refinance you to make money, right? There may be a way that we can convert your existing mortgage and turn it into something Sharia compliant, okay? All mortgages that are residential mortgages are designed to be sold to Fannie or Freddie, okay? And we have some very sharp lawyers. Our cousins, as you know, are very good with law and finance. They found a loophole in these documents that allows us to do what we do. We're the only company that's figured out how to do it. This loophole works in the favor of the Muslims. And so we may be able to take your existing mortgage and restructure it and make it Sharia compliant without you having to go through an expensive refinance process. Okay? I just want to quickly just touch upon some commercial stuff that we do. If you are a CPA or a professional or a medical, we can do zero down practice finance. Let's 5% down for the building if you're buying a building. Up to 25-year financing. You can get up to 12 months of construction with no payments. Okay? If you are buying a single family home, okay, 1 to 4 units is considered residential. It has to be zoned residential, okay? Up to 10 properties per investor. I think our closest competitor can do 6. We can do up to 10. We do have portfolio investors that will do unlimited investment properties, okay? We also have investors that will only look at the lease income. They won't look at your other income, only the income from the property itself, and then determine how much they'll finance based on that, okay? But it is possible that if you have 30 investment properties, you can't go anywhere else for an Islamic transaction. Guess what? We can do it for you, right? Because we're a nonprofit. We're not interested in trying to keep everything for ourselves, right? We work with lots of people that are wanting to get into Islamic finance, so we're willing to share the process with them, the intellectual property, okay? And renovation and construction is possible. You want to build a new house? We can do up to $1 million in construction financing with as little as 5% down. You have to qualify, of course, okay? Then we have, for example, our business financing, just general businesses, right? We know a lot of people in our community are in business, okay? We can do with as little as 5 to 10% down, up to 25-year financing, up to $5 million. We can actually do up to $40 million total, okay, with any one investor. But we can also combine investors together to do larger projects if necessary. So this is not really, this is per transaction. This is not total, okay? Some of our competitors have a maximum cap. They can only do $2 million worth of loans with any one person, and then you're done, okay? With us, you build a relationship, we can do up to 40 million in transactions with you without you having to restart the process over and over and over and over again, right? So we have lots of people that have, 4, 5, 10 transactions with us, and it's a very simple process to just keep updating and redoing transactions. You don't have to build relationships all over again. And we do warehouses, offices, restaurants, hotels, anything that has real estate with it. Up to 25-year financing is available, okay? And then we can do businesses only without the real estate. The maximum is 7 to 10-year financing. Remember, with real estate, we can do up to 25 years. Without real estate, we can do a maximum of 10 years. But we can do a lot of different things, okay? And again, remember, we're not tied to one process, right? We don't just do Murabaha, we don't just do Mushara, we don't just do IJARA. We use the right method for the right piece. So you may have all these things done with different methods, but we're doing it all for you. Does that make sense? And then we have, for larger deals, this would be like a Walgreens, for example, right? Or a little mini shopping center. We have a lot of people that come to us with those kinds of requests. We can do up to 20-year financing, sometimes even without personal guarantees, right? Whereas a lot of people may require personal guarantees. Multifamily, we can do up to 300 units, up to 25 million, and as little as 20% down. Okay, now, 5 to 8 units, don't come to us. We don't really have a way to do that. 1 to 4, very good. 8 or more, very good. Somewhere in between, we don't have investors for it. So if you have a 6 unit, don't even come to us because we don't have a solution for you. Does that make sense? Just straightforwardly, because I don't like to waste people's time. But if you have more than 8 units, up to 300, we have a solution. If you have 1 to 4 units, we have a solution. Okay? And we do nonprofits. Okay? We probably do larger nonprofits than most other people. We do community centers and schools. We can do up to 20 years. In some cases, only 20% equity, depends how old the organization is. If they're doing construction, you get up to 12 months of no payments during construction. We can do up to 7 million on the nonprofit financing. So this is all available for nonprofits, means schools, masjids, and community centers, okay? So let's look at how the rent payments are divided. So in our transaction, the rent payments are divided into 3 parts. Part of it goes for profit, part of it goes for on account of your equity, and then part of it is your cost of ownership, your taxes, insurance, and then administration fee. So after you make a payment, the following month, less goes to profit, more goes to your ownership. Your cost of ownership and your rent payment basically stay the same, right? So the more you pay, the more you own, the faster you take over ownership, right? The profit keeps decreasing over time. So as an example, let's say you started with $100,000, you put $20,000 down, and then over time, you made the same payment, right? Your taxes and insurance. These would change because, we know taxes and insurance change every year, right? But just as an example, I just left it the same. But the word mort in mortgage or amortization, mort means death, right? You're basically killing off a balance. So in most traditional transactions, you see your balance going down, right? An IJARA transaction, you're actually saving up to take over ownership. It's a reverse amortization, right? Does that make sense? So the math is the same, the calculation is the same, except your balance keeps increasing over time, right? But it increases at the same rate that, you know, a normal transaction would decrease, right? So as the months go by, the amount that goes towards profit decreases, the amount that goes to your ownership increases, but the payment stays the same, right? Does that make sense? The more you own, the less goes to profit, and the more that goes to ownership. Does that make sense? Okay, what happens at the sale of the property? And I'm almost done, I promise. Let's say you buy the property, you put a down payment. Over time, see, you paid off some of the balance, right? Your equity increased, and the property went up in value, right? Now, if you have two owners, what do you have to do? You have to share according to your percentages, right? Legitimate Mushara, you have to share according to your percentages, okay? But what do you do if there's only one owner? You don't share with anybody, right? Does that make sense? Okay. And who owns the property in our transaction? The trust, right? How many owners is the trust? One, right? So who is the trust going to share with? No one. So legitimately, from a Sharia perspective and a legal perspective, there's no sharing of gain or loss, right? So let's follow the money, right? 100% of the money comes into the trust, okay? The trust is then going to pay off the investor, right? And then the rest of the money is going to go to who? The beneficiary. Make sense? You see how clean and simple that is? There's no we're waiving our gain, there's no, it's legitimately, straightforwardly, that's how it works. The trust gets the money from the closing, pays the investor, you get what's left over. Make sense? Okay, so let's look at something, second thing that might happen, right? The property might go down in value, right? Have we seen this? This happened in 2008, 2009, right? Where properties went down in value, okay? So let's follow the money again. The trust gets 100% of the sale proceeds, right? The trust will then pay the investor what's left, and then whatever's left over will come to the beneficiary, right? Even if that amount is less than what you put into the property, you're taking a loss, right? You can't have 100% of the gain if you also don't have the loss. Does that make sense? Right? So let's look at the final example here. What if there's a total loss? Have we seen this also? Have there been cases in the U.S. where property values... What's that? Trump, yeah, okay. Property values have been below what was owed, okay? He's taping this, so I'm not making any comments. We have, this situation has happened, right? We know that there are times when properties have been worth less than what was owed, right? We've all heard about this. So what's going to happen? Well, if this is the case, you're not going to be allowed to sell the property, right? Without permission from the investor, because they're not going to take a discount, let's say, okay? Because what's to stop you from getting your cousin, brothers, nephews, uncle to come along and make a lowball offer, right? Oh, my property is only worth $70,000. Yeah, I know I owe 150, but it's only worth 70. Take a discount. No. So basically what will happen is you'll either get excused, you can go along your merry way, or they'll agree to, basically it's going to be like a short sale, right? They'll agree to take a discount, in which case everybody loses, right? You're going to lose whatever your investment is, and they may take a loss also. So that's a possibility that does exist, and it could happen, okay? Now, what would happen though in that case? In that case, in order for them to be able to take a loss and be able to deduct it from their taxes, they would have to be able to give you what's called a 1099, right? So it would show up on your tax return as if you had an income. However, under the current IRS rules, you don't pay tax on it. but they need to report it so they can take the loss on their income tax return, right? Secondly, it's going to affect your credit, right? If you choose not to make up the loss, it's going to affect your credit. And then finally, we're the only company that since 2010 has been offering Murabaha Sukuk contracts, okay? These are like Islamic bonds, and these are strictly for commercial transactions, but they have pretty good yields compared to like, a CD at a bank or something like that. And alhamdulillah, that's my presentation. Thank you so much for sitting through and listening to that. Yes, brother.
Each year when you file your taxes and you're worth $10 billion, how do you shelter the income based on this?
Well, I don't know that I can answer the exact question that you asked, but I would, yes, I understand what you're talking about. There are I'll talk about our transaction though, okay? In our transaction, it's the only Islamic transaction that's actually physically written into the IRS tax code, okay? If you research the tax code under a section called a Maryland redeemable lease, okay? Our lease transaction actually meets all the requirements, and it has been tested under audit that you can actually deduct the profit portion and the property tax portion from your income tax return. Other transactions that are done in the U.S. have not been written into the IRS tax code. The IRS is currently accepting the deductions, but you could get an examiner that says, oh, it's not in the tax code, we're not going to accept this tax deduction, right? Our transaction is actually physically written into the tax code and we meet the requirements. So that's number one. You do get a 1098.
So what about depreciation?
Well, depreciation is more on the investment property side of things, okay? On the investment property side of things, if you own a property as an investment, you are able to take depreciation, okay? The other thing that I'll say too about the lease part of this is that because it's a lease, people that have Section 8 can actually qualify for financing because Section 8 allows their rent payments to be utilized towards home ownership. This program qualifies for that, okay? So there's quite a few things about the structure of this transaction which actually are a huge benefit to every member of our community. Now getting back to depreciation, the other issue that some people have is that there are other types of benefits that they may be able to qualify for that they may not qualify for if they technically owned a property, okay? And because this property is owned by the trust, right? I'll give you an example. Several years ago, probably 6 years ago now, 7 years ago, we had a doctor in New Hampshire got sued for malpractice, right? He called me up, he's extremely worried. Brother Schwab, what's gonna happen? His property was worth $1.8 million, right? He had a right to be worried. Well, first day in court, the property got excused from the lawsuit. You know why? Because he didn't own it, right? He didn't own it. It was owned by the trust. So it was protected, right? So similarly, there are times where there are programs that you might be able to qualify for where if you owned a home, then you may not qualify for that program, but this is technically not considered. So you can't, like, for example, financial aid for college education, right? If you physically own a home, right, then you may not qualify to get, financial support for college, okay? But this may qualify because technically speaking, it's a rent to own, right? Even though you have full rights and full control, you have to look at what are the requirements, right? Every program, every government program out there has specific requirements. And just like if you meet all the requirements, you qualify, right? Does that make sense? So there are other benefits that you might get for wanting an Islamic transaction that you can get with our program that may not be available with other structures. Do you have a question?
My second question is, see, there are companies like, for example, I live in Hidayah, okay? And income-wise, I mean, we can qualify for, let's say, 300,000. But if there's a company, a non-profit just like you, the land, I don't know the exact name to call it. Land, you don't own the land. Which was the land? Something like that. It's for 100 years. You never like get a full ownership.
The land lease.
But it requires a mortgage.
Yeah.
From a bank. They take off, for example, they'll help you get
Yeah,
a loan.
there's land leases or land trusts
Yes.
that they have here, land trusts.
So we need basically a mortgage.
Yeah, so for a land trust transaction, it's complicated, okay, but we can do it.
Okay?
Yeah, but it's very complicated. It takes us a little bit of time. You should probably plan on at least 90, 120 days, okay? A lot of legal stuff involved, but it is possible for us to structure a transaction in that situation, yeah.
Because some of the people here cannot hear the questions. If you want to repeat what the question was.
Okay, so the sister asked, in Minnesota, they have certain areas where they have land trusts, okay, or land leases. Is it possible to be able to get financing for something like that? And the answer to that is yes. Basically, there's a way that we can structure that. You need to allow more time for the closing, typically 90, 120 days, because it's far more complex to get that done in an Islamic structure, but we can do it. Yes.
It seems like your average lawyer or attorney, what you normally do when you do business in the United States, probably would not know where to start off. So is it that there's a group of attorneys, a young group of accountants that just deals on this level? Because, the average lawyer, you start talking about what you just said. I mean, they've been to law school, but I mean, it's there. You just can't go out and get to the lawyer.
Right. So you actually bring up an interesting challenge. And one of those challenges is that a trust is a specialty instrument, okay? And even a lot of lawyers that don't specialize in trust don't really understand how a trust works, okay? But the good news is that because a lot of people of wealth, a lot of business people already utilize trusts, right? Title companies and title lawyers are very familiar with how a trust works. And so we're able to interact and interface with them to be able to get transactions done. Any other questions? Yes, brother.
One more question here. So suppose you buy a house for $200,000, and then you pay a certain amount of down payment. So if you pay, what would be the exact amount that you could calculate that would go toward the actual home payment?
Okay, I'm Indian, but my math is not that good, okay? We have a calculator on our website, okay? And if you go to the calculator, it will give you a breakdown, month by month, okay? How much is going towards the rent, the profit, and how much is going towards your ownership. And what you'll see is that there's a slow change over time. More and more goes to your ownership and less to profit, right? But you can make extra payments, right? What a lot of our customers do is they round up their payment, and then once a year when they get their income tax refund, they make a big payment towards their principal. So we actually have customers that since 2005 have paid off their homes 100%. Very easily, small little, they say a small thing done frequently gives you a big result, right? Yeah. Any other questions? Yes, brother.
What's your interest comparing to the other companies?
What is our interest? Okay, well, first of all, there's no riba in our transaction, right? There is a profit, there's a profit made, but if you remember, we do not mark up the rate from the investor, right? We're not actually having to worry about marking up the rate so we can make a profit when it's sold to Fannie or Freddie, right? Less than 4% of our transactions have ever been sold to Fannie or Freddie. Less than 4%. Whereas 100% of our competitors' transactions get sold, right? So it's a different format. So there's no markup in that rate. So generally speaking, you will get the lowest rate that's available, and it should be somewhere in between our competitors and the normal bank rate, right? There's always going to be a bank out there that's going to be cheaper. For example, right now, if you went to bankrate.com, right, you might find 30-year fixed transactions for 3.5%, okay? We may be 3.625 with our investors, depending upon, if everything being equal.
Do you have typically different profit rates or interest rate, whatever you want to call it, and also different down payments based on the credit history of the person? Or you always give a flat stuff, no matter how good your credit is, or how much of the down payment you're bringing to the table?
Well, it's all programmatic, right? Depending upon which program you qualify for, that's what's going to determine what the profit rate is, okay? And, some people say, well, how do you determine the profit, right? Well, the way we would actually like to do it is we'd like to be able to say, okay, the house is over here, we want to charge a certain rent. The house is over there, we want to charge more rent. The house is here, we want to charge less rent. But the government says that that's a form of discrimination called redlining. Okay, so we can't use area to determine the rent. We have to use economic factors like credit, like down payment, like debt to income ratio, things like that. So no matter where you buy the house, okay, the profit rate won't be determined based upon where the house is. It'll be determined based upon what your financial profile is.
So the answer is yes. You would have different rates depending on your personal credit or your down payments or different things.
Yes, there could be a difference, okay? But you know what though, that being said, for example, if you have a 620 credit score, okay, to 660, okay, the rate's probably going to be the same. When you get over 660 to like 720, the rate's going to be the same. So there's a range, right? You have to find out which tier you're in.
So that's actually a good segue to the next question. Do you have like a cutoff rate, like a credit number?
The minimum credit score ideally is 640. We do have investors that'll do as low as 620, okay? And the highest credit score, the better. For our competitors, they want the higher credit score stuff, right? And this is what I tell people. I say, look, if you go to one of our competitors, they want the 700 credit score. They want 10% down, 20% down. They want the doctor, the engineer, right? But what about the person that sweeps the floors at the hospital, that has 5 kids? Don't they deserve Islamic finance also? Don't they? Even if they have a 620 credit score, right? Even if they don't have big down payment, right? They deserve it also. Who's going to finance them? Do you think they're going to finance? No, we're going to do it, inshallah, right? Because we want to support our community, right? But we can't support our community unless our community works with us, right? Our investors have to have good results as well, right? So we need the doctors, we need the engineers, we need people to work with us so that we can help less fortunate people in our community, right? So by working with us, people can get, inshallah, a very good rate, right? And they can also get an Islamic transaction, and they're indirectly helping people less fortunate in our community without having to have people make donations all the time, right? Our competitors don't do this, right? Who's going to give somebody in Nebraska an Islamic transaction? Why don't our competitors operate in Nebraska or states like that? Why? You know why? The population is low. It's not profitable to operate in Nebraska, right? We're a nonprofit. We take profitable states and we support non-profitable states because we believe that even the people in Nebraska deserve to have an Islamic finance transaction, don't they? Okay, but we can't support our communities. Remember, we're servicing all 50 states and all provinces in Canada. We're the only organization in North America doing it. We can't do it without the support of quality, high credit, high down payment, customers, so we can help other members of our community, right? So get inshallah, the cheapest Islamic finance transaction, something that's Sharia compliant, something that'll give you estate planning benefits, right? Something that'll give you maybe liability protection, right? Something that will help your neighbor buy a house because he deserves a house, also, right, in an Islamic way. Somebody that's living out in the middle of a farm in Nebraska can have an Islamic transaction also, right? So this is why we want you to work with us, because we want to help our community, right? So, yes.
I wanted to ask, in the 620 score, what is the down payment amount that the buyer should expect?
Minimum 3.5%.
Even with low score?
Yeah.
So that's single family ownership. What about business? What does the individual or does the company ability? What do you look at, the company ability or the individual who you're dealing with?
Well, it depends. It depends on what it is, right? I mean, what kind of business? I mean, what is it that you're trying to do, right? So there's going to be. I'm sorry. Real estate development. Okay, so if you're talking about development, which is buying a tract of land, putting in roads and infrastructure, and then building houses, okay, that's going to be based upon track record. And we can do that. We can do land development deals, right? So you can get the financing to put in the roads, put in the retention ponds, do the infrastructure, and then sell those off to builders or get financing to build the homes themselves, okay? But that is also going to require at least 30% equity injection in the entire project. It's going to require history from the developer, so you have to have a track record of having done it before. If you don't have a track record, you need to have partners that may have a track record or have reliable contracts. For example, you may have a builder, but that builder is going to have to be bondable, right?
What if you have development rights to a large parcel of land, like 50 acres? So you have the development rights to build, design, do the necessary engineering for the property. Exclusive rights.
Okay.
Can you use that as leverage for financing?
Well, it's a complicated answer, okay? And the reason is that while there's not a tangible asset there may be a real value to that in terms of whether, and it may have a value in the property itself, right? Because if you were to buy that property, and there's a couple of realtors here that can answer this. If you buy a property, maybe it's worth X, right? But if you buy a property that's already zoned, right, that's already had all the planning and everything else done, then maybe the price is a little bit more because somebody can come in and pretty much start construction right away. They don't have to go through a long approval process. So there could be some added value to that. So the way it would be determined, what the value of that would be based upon some kind of an appraisal, right? So you'd have to get an appraisal done to figure out what that is. And then if the property's been owned, and this is why I say complicated, if it's been owned for more than 12 months, then you can go based upon the current value. If it's been owned for less than 12 months, you go based upon what you physically paid for it, okay? But what counts as equity is what you actually spend for architectural engineering, legal fees. Every dime that you put into it, every time somebody goes out and cuts the grass, right? Even if you're cutting the grass and you keep your gas receipts, right? That goes towards your equity. So we can account for all that. I mean, that's,
So a question.
Yes.
Once you own a home, what is the limit of, paying it faster and be done with the mortgage?
Okay, so this is 4 months, okay? Scholars say minimum 4 months, okay, because if you do less than 4 months, it's considered to be speculation, and our transaction is not supposed to be used for speculation. So when you buy a house, just don't pay it off in the first 4 months. You can pay it off in month 5. No penalties. But even if you did pay it off, right, there's still no penalty, right? But the recommended period is not, because we don't have a prepayment penalty or anything like that, the recommended period is 4 months, so that from an Islamic perspective, a Sharia perspective, is not considered speculation.
So can they make so let's say their payment is 1,000 a month, can they put like 20,000 every month?
Yeah, as much as you want. You're just required to do the minimum, that's all.
No penalty?
No penalty. Yes.
Do you have if location, like for example, if I prefer like South Minneapolis or somewhere, do you don't have?
Everywhere, anywhere. You pick the house. And you have to like the house, okay? I once saw an appraisal, and it's not a joke. Picture of the living room was a blue carpet and pink walls, okay? We don't care. If you like that, that's fine. That's it. Yeah. Any other questions?
So can you little bit explain?
Yeah, I have some right here.
Can you little bit more explain how you renovation program?
The renovation program? Yes. Okay. So if you find a house, like some people, they say, I want to buy a foreclosure, right? The problem with foreclosures is sometimes the property needs work, right? Maybe there's holes in the wall. Maybe somebody pulled a cabinet off the counter. Maybe somebody took the water heater, right? I mean, it could be in bad shape, okay? So in order for you to be able to buy that property under normal guidelines, right, it would have to be in move-in condition. So either you have to pay cash for the house. This is why, people that do this get good deals, right? Because they're able to pay cash, okay? So you pay cash and then you spend the money to fix it up. But if you're buying it and you have the time, it takes about 60 days, you can buy the property and get the money to fix it up. You can put a new kitchen, you can put a new water heater, put a new roof, new carpeting, new deck, everything you want. You just have to use a licensed contractor. So the contractor that you use has to be licensed, and they have to fill out the forms and get qualified. And then as long as that's the case, then you have to use that contractor, and they finish all the work. The money for the renovation still gets paid to you, and then you're responsible for paying the contractor. It's never paid directly to the contractor because we don't want them to run away with the money, right? So it'll be paid to you, and then you pay it to the contractor. Right.
So then the money would be built into your mortgage?
So it's built into your transaction, right? Yeah. Right. So the appraisal, when the appraisal comes in, the cost of the renovation, okay, can be no more than 50% of the end value, right? So if, for example, you buy something and the renovation is $100,000, right? And the value is going to be $250. Well, that's acceptable because the $100,000 is less than 50% of the $250, right?
$150,000 is unacceptable.
But $150, and if it's worth $250 when it's finished, that's not going to work because that's too much renovation for what the end value is. It means you have to negotiate a lower price. Any other questions? Okay, yes. One.
So you talk about units, you say you buy one bedrooms or?
No, units are like apartments, right? So you have duplex, triplex, fourplex. So you have 4 in one is a fourplex, 4 unit. Yeah. Okay, any other questions? Last one.
Let's say you go to the house. Down payment, everything. You still paying the same amount, like minimum payment, if you pay 4 or 5 times of that. Do you have to explain where you get the money from?
No, the Patriot Act only applies to when you're applying for the financing. Afterwards, you can make large payments, small whatever. As long as you make the minimum payment, that's all that matters. Okay, Jazakallah, thank you everybody. Appreciate your time and coming. Yes, please. And pass the word along, sister. Let people know about us. Inshallah, we can help our community. Yeah.
So if you buy a house like 250,000,
Yes.
then you pay, is it 30 years?